Hello, good morning, students. My name is DEEPAK, Assistant Professor in JAYOTI University. And today's class will see income exempted to trust and institutions. Right. So this will come under section 11. So what are the conditions and exemptions? I'll tell you one by one. So please listen carefully and try to understand all the transactions and all the conditions. Okay, first one is trust. Trust must have been created for any lawful purpose. Number two, such trust or institutions must be a charitable or religious purpose. According to Section 215, charitable purpose includes relief of the poor, education, yoga, medical, relief, preservation of environment, including watersheds, forests and wildlife, and preservation of monuments of places or objects of artistic of historic interest, and the advancement of any other object of general public utility. So, trust should be for the religious purpose, it should be for lawful purpose, for charitable or religious purpose. If it is unlawful, then it will not be tax free. Okay, trust institutions cover under and advancement of any other object of general public utility can do commercial activities up to 20% of its total receipts. And the advancement of any other project of general public utility shall not be a charitable purpose. If it involves the carrying on of any activity in the nature of trade, commerce, or business, by any activity or of rendering any service in relation to any trade, commerce, or business for cess or application or retention of the income from such activities, unless such activities is undertaken in the course of actual carrying out such advancement of any other object of general public utility, and the aggregate receipts from such activities or activities during the previous year do not exceed 20% of the total receipts of the trust or institutions undertaking such activity or activities for the previous year. The property from which the property should be held for charitable or religious purpose. In the case of charitable trust created on or after April 1st, 1962, the further conditions are they have to follow these conditions also. The trust should be created for the benefit of a particular religious community or a caste. No part of income should ensure directly or indirectly for the benefit of the settler or the specified person. The property should be held wholly or charitable purposes. The conditions mentioned at B and C also apply to religious trusts created on after 1st, 1962. Next, the exemption is confined to only such portions of the trust income which is applied to charitable or religious purpose, or it is accumulated for applying to such purposes within the limits of accumulation permitted under section 11(1) and 2. The exemptions section 11 and 2 are which I have already discussed with you. The admission restricted to such portion of the income as applied to charitable and religious purpose in India, except in case covered by section 11(1). And next is where trust property comprise a business undertaking, the income shown in the books of accounts should not less than the income determined by the assessing officer according to the provisions of the Act. However, the exemption from tax will not be available to any religious or charitable trust or institution in respect of business profits, unless the business is carried on by the trust wholly of public religious purposes and the business consists of printing and publication of books or publication of books or the kind notified by the government. The business is carried on by the institution wholly for charitable purpose and work in connection with business and mainly carried by the beneficiary of the institution. And the separate books of account are maintained by the trust institution of such businesses. From the assessment year 1992 or 1992 or 1993, trust or institutions can carry out business activities if business activities are incidental to the attainment of goods objectives, and separate book of accounts are maintained. In other words, irrespective of whether any business is carried on by such a trust or institution of the business undertaking itself inherent trust. In either case, the trust or institution is charged to tax on such profits and gains at the rate of tax applicable in the case of individuals, associations or persons, body of individuals, etc. if the above conditions are not satisfied. Next is the trust should get itself registered online through Form 10A for application with the Commissioner of Income Tax. Where a trust and institution has been granted registration for purpose of availing exemption under Section 11, and the registration in force of previous year, thus such trust or institution cannot claim any exemption under any provision under Section 10. Right. So the accounts next is the account of trust should be audited form number 10B for such accounting year in which its income without giving effect to the provision of section 11 and 12 exceeds the exemption limit. The funds of the trust should be invested or deposited in any one more of the modes or forms mentioned in section 11.5. The return on income of trust should be submitted within the time allowed under section 139(1). If the total income of the trust institution before giving exemption in the section 11 and 12 exceeds the maximum amount which is not chargeable to tax, where the property held under a trust includes a business undertaking, the provisions of section 11(4) shall be applicable. On the other hand, if the trust wishes to carry on a business, the profits or gain earned from such business shall not be exempt under section 11, unless the business is incidental to the attainment of the objectives of the trust institution and separate books of account are maintained by such trust and institution in respect of such business. So I hope you understood all the exemptions which incomes exempted for the trust and institutions. If you have any type of doubt, you can ask me uh, in the comment box. I'll definitely will try to solve your queries. If you like this video, then share it with your friends. And if you have any type of doubt, so you can write in comment box. Definitely, I'll give you. I'll try my best to give you answers. And uh, questions. What questions can come in this chapter? In this chapter, they can ask what is income, what is total income, what incomes can come, which incomes are not part of total income, and what incomes are exempted for the institutions and for the trust. All these things they can ask, and what we have discussed till now in income tax, we have discussed meaning of income tax, definitions of income tax, and then we have seen residential status, and after that we have seen what is the incomes due and accrue and received in India, and we have seen income deemed to receive in India, and we have seen salaries part also. And in this questions in this video, uh, I hope you will understood all the you have understood all the exemptions of this chapter or of these incomes which are exempt from total income. Please remember all the sections, because if you write sections you can score good marks. If you don't write sections, so you will score less marks. So this is your choice completely. So my wishes is with you. Keep learning, be in home, study hard, and if you find any type of doubts, you can ask me, and please give your suggestions so that I can improve myself and can give you better videos. And खुश रहिए, सेफ रहिए, मास्क लगाए रहिए, घर में रहिए और स्टेट गवर्नमेंट की गाइडलाइंस का पालन कीजिए. Thank you very much. Be in home, be happy, stay safe. Thank you.